This video is going to review one of the trade alerts that we posted for our market hours option alerts for stock market guides. So this video, it's being filmed on December the 11th, and on my screen here I have the alerts that we sent on December the 4th, and you can click this calendar icon to adjust which day you see the alerts. And you can see this alert right here is for Apple. It's for Apple call options, and the alert was based on a strategy here that we call our base pullback strategy. It has very specific criteria for when to enter a trade, and it's based on holding the position for 1 week. And what this shows right here, these backtest results, it shows how this trade setup performed historically for Apple using call options with our methodology for picking a strike price. So basically, this kind of gives you a snapshot of how historically has this trade setup down here performed for Apple when buying call options. And so I'm just going to go now and look at the actual chart for Apple to see what happened. So here it looks like it got called out at 10:40 a.m. on the 4th there, and that's Eastern Standard Time. And so the 4th, this is a chart I have here in the Thinkorswim trading platform. And this is December the 4th right here. And I could pull up the 1 minute chart that shows like the detail throughout the day. But basically the entry was right around this blue line. That's in fact how the trading strategy works for that base pullback strategy that's featured for that trade alert. Is an entry is called when you get to this blue line right here. And you can see what happened after the entry. The price kind of took off, and it doesn't always happen this way. But for this particular trade call out, it worked out nicely. So we sent the alert at this time. The alert can be sent by email or by text, depending on how you configure the alerts in our system. And what it calls for is to hold a position for a week. So if you mouse over this question mark right here, you can see exactly what date and time that is. And so it's December the 11th, which is today that I'm filming this video, and it's 9:30 a.m. Eastern Standard Time. That's the opening bell of the stock market. And so this right here is the price bar for December the 11th, and the opening bell was right about where we are price-wise right now. And you can see here that right over here, this shows what is our estimated current price for that option. And so you can see the alert was posted when the option price was estimated to be about $12.86 a contract. And right now, which is, again, the stock is right about the same price as it was at the opening bell. It's going for $17.95. So this one was, a $500 profit or so per contract based on entering right at that entry time and exiting at the opening bell. You can see that overnight, the price was way up here and then it dipped down. And so there was some sacrifice made there as far as giving up profits. But that's the trade-off that all of us face as traders, is you don't know what's going to happen next in the stock market. And so you don't know whether it's going to go up or going to go down. And so the beauty of following a trade alert like this is that the trade alert is just completely laid out for you. You can simply follow along if you'd like. You just buy it if you'd like to buy it, and this tells you exactly when to sell it. And it's just that simple. But if you want to use discretion, you definitely can use discretion. So, in the first 24 hours from the time the entry was right here and, got up to here, that's a big gain already. So you could consider, if you want, just locking in profits right there or right here or anywhere you want. It's completely up to you how to manage the trade. What we do is we just give you the information. We tell you when a trade setup is occurring that has a back-tested edge, and we give you the exact framework for the trade, which in this case just means buy the position and hold it until this date specified. So that's how this Apple trade turned out. They are not all winners, and that's part of the thing that successful traders typically have to learn to cope with, is the fact that there are losers in there as well. So this was a nice trade. It turned out profitably, but there are going to be trades that don't go that way, where the price goes down, or it meanders, or doesn't respond quite as well as this. So ultimately, the goal is to have an edge, to have the odds in our favor, and that's the whole purpose of this service here, is to give trade ideas that have a history that suggests there may be an edge in your favor. It doesn't mean they're all going to be winning trades, but over time, if you indeed are trading with an edge, then that could be quite lucrative. If you have any questions, you can reach out to us anytime. Our email address is support@stockmarketguides.com.